There are moments in modern finance when silence matters more than noise, when nothing happens and yet everyone is watching. For months, traders have waited for a single move, a sell order, a signal, a decision that could ripple across global markets in seconds. But instead of action, there has been confirmation of restraint. The United States government has said something unusual in today's financial climate. We are not selling. Not now, not planned, and not quietly behind the scenes. To understand why that matters, we need to slow down and look at how Bitcoin ended up sitting inside the vaults of a government that once viewed it as a threat. Bitcoin did not enter the world as a government asset. It was created precisely to exist outside governments, outside central banks, regulators, and political influence. For years, the relationship between the U.S. government and Bitcoin was distant, skeptical, and sometimes openly hostile. Agencies warned about risks, regulators struggled to define it, lawmakers debated whether it was a currency, a commodity, or something else entirely. Yet quietly, over time, Bitcoin began to cross paths with the state, not through adoption, but through enforcement. Criminal investigations, cybercrime seizures, court-ordered forfeitures. Bitcoin was taken, not bought, confiscated, not invested in. Large sums ended up under government control, stored, accounted for, and legally owned by the U.S. Treasury through various agencies. And that created a question no one had faced before. What does a government do when it holds an asset designed to exist beyond government control? For years, the answer seemed obvious. Eventually, it would sell. That's what governments do with seized assets. They liquidate them. They return the value to the system. But Bitcoin complicated that assumption, because Bitcoin is not just an asset, it is a signal. Recently, clarity arrived, not through a dramatic announcement, but through confirmation. The U.S. government stated that it has not sold its Bitcoin holdings and that there is no current plan to do so. That sentence may sound simple, but inside it sits a shift in posture, because markets had been watching closely. Every wallet movement was scrutinized. Every transfer triggered speculation. Was this the beginning of a sell-off? Was Bitcoin about to face pressure from the largest sovereign holder in the world? Instead, nothing happened. And then it was made official. No liquidation, no disposal plan, no quiet unloading through intermediaries. This wasn't framed as a strategic investment decision. It wasn't described as an endorsement of Bitcoin either. It was something more subtle and perhaps more revealing. The government chose not to act. In financial systems, inaction can be a form of policy. Historically, governments have sold seized assets quickly to avoid exposure. Price volatility is risk. Holding unconventional assets invites scrutiny. Yet this time, restraint prevailed. That restraint suggests internal recognition of Bitcoin's unique role, not as a currency replacing the dollar, but as an asset the world is watching very carefully. Bitcoin exists in a fragile space between belief and legitimacy. Every major institution that touches it changes its meaning slightly. When a government sells Bitcoin, it sends one signal. When it holds Bitcoin, it sends another. By choosing not to sell, the U.S. government avoided becoming a market force. It avoided distorting price action. It avoided confirming fears of a sudden supply shock. For ordinary people, this matters more than it may appear. Bitcoin's volatility has always been tied to uncertainty, not just technological uncertainty, but political uncertainty. Who will regulate it? Who will restrict it? Who will suppress it? Restraint reduces uncertainty. It does not turn Bitcoin into a safe asset. It does not guarantee stability, but it removes one large unknown from the equation. Globally, governments are watching each other. When one major power demonstrates caution rather than hostility, it sets a tone, not acceptance, not rejection, but observation. This moment fits into a broader pattern where institutions are no longer asking whether Bitcoin exists, but how to coexist with it without destabilizing existing systems. No plan to sell does not mean no plan forever. Policies evolve, administrations change, economic pressures rise and fall. In the future, Bitcoin held by the government could be sold gradually. It could be transferred. It could remain untouched for years. What matters is not the specific outcome, but the precedent being set. The idea that Bitcoin can sit inside a government balance sheet without triggering immediate disposal is new. It introduces a quiet possibility that Bitcoin is no longer viewed only as seized contraband, but as an asset requiring strategic patience. That doesn't make it official money, it doesn't make it state-backed, but it places it in a category few imagined a decade ago, something governments must handle carefully rather than eliminate quickly. Markets will continue to react, speculation will continue, but the deeper story is slower. It's about normalization without celebration, recognition without endorsement, and perhaps most importantly, restraint without panic. Bitcoin has always been loud. Its supporters are loud, its critics are loud, its price movements are loud. What's unusual here is the quiet. A government holding an asset it once wanted nothing to do with and choosing, at least for now, to do nothing. That silence doesn't mean approval. It doesn't mean surrender. It means acknowledgement. In a world where financial systems change slowly, sometimes the most meaningful developments are the ones that don't come with headlines, speeches, or sudden moves. They arrive as confirmations, as pauses, as decisions not to act. And in that pause, the world adjusts, not dramatically, but carefully. Bitcoin remains volatile, uncertain, contested, but it is no longer invisible, and sometimes being seen without being struck is its own kind of milestone.